You guys, helping consumers that have student loans is one of the biggest opportunities you're going to have, not only in 2023, but quite frankly, in any market. And what I'm going to share with you today, I'm really, really excited about. I have a good friend here from a company that is going to help you help borrowers with student loans. So why is that important? Let's take a look at this. So I've been doing consumer direct marketing for about 15 years. And when the student loan came onto my radar, I immediately recognized it as one of those topics there's going to be a huge demand for information and education about it. First of all, it's a huge demographic, and we're going to talk to Catalina from LoanSense in just a second. We're going to talk about how huge this demographic is. One of the other things that really makes this a great topic to create education about is every agency has different guidelines. Fannie Mae's guidelines are different from Freddie Mac's, different from FHA, VA, and USDA. And what makes it even worse is when they released these guidelines in 2015, then they proceeded to change the guidelines every 6 to 8 months for the next few years. And it made it crazy. So misinformation is not only likely, it is rampant. Consumers they're getting stuck in call centers. They don't know how to handle this. Let me blow this up. Let me show you why. Oh, there's Catalina. Hey, Catalina.
Hello.
I wasn't sure when you were going to pop in. So I just want to share a couple of slides with everybody. So if you're watching this on YouTube, you can see I did some screenshots of how big this audience is and what this could mean to your business. So I have here a screenshot of my Google Analytics, and I have my top 10 articles about student loans since 2015, has over 164,000 visitors to these articles. You'll see the majority of that, well over 100,000, is for 3 articles. I also have look at that young man with that goofy hair. I also have a video that I published I think this was 2018. Yeah, it was 2018. It was after Fannie and Freddie decided to stop flipping their guidelines. We've got over 95,000 views. Now, this video was funny, Catalina. I think you and I have shared this story. Look at this, over 95,000. Almost 18,000 hours of people that have watched this, and we got 43 subscribers to our channel just from this video. And this was funny because I was going to do a Zoom call with a loan officer friend of mine, and we were going to talk about student loans. And she had technical difficulties and she couldn't log on. So I'm like, screw it, I'm just going to wing it. And I sat there and I rambled. This is like a 24-minute video of just me free form, just talking about everything that I've learned about student loan guidelines. And I published it. And there's a lot of people that were interested in it. So let me show you this. Let me see if I can make this a little bit bigger. So these are 2 leads that I got this week from people that have that are looking for a second opinion because they have student loans. This one is a home buyer. He has student loans. He's having debt to income ratio issues, which is the crux of all of this. When we say student loans, we're talking about debt to income DTI problems. And we're going to talk to you about why that is and how to solve that. But this particular guy, owns a home free and clear, has an 800 FICO, trying to qualify for a USDA loan, and he's in an income-based payment. So he's being told no by lenders. This one also came in this week. He has student loans. She's having debt to income ratio problems. She's enrolled in PSLF, which is the Public Service Loan Forgiveness. And then she's been denied by other lenders. And I can tell you for an absolute fact that I would say north of 90% of these consumers that are being told no can be helped.
Absolutely.
Right? And so when the guidelines changed in 2015, I think it was June or July of 2015, we recognized this as it was going to be an issue. And I was on this topic. And then I don't know when you and I met, Catalina, but like
2021, I think. Yeah.
was it 2021? Was it that long afterwards? So anyhow, I was introduced to Catalina but from Brian View, the CEO of FinLocker, and he was like, man, you're doing all this stuff with student loans. You got to meet this. You got to meet you got to meet Catalina and see what she's doing with her company with LoanSense. So why don't you introduce yourself real quick? Talk about LoanSense, and why you created LoanSense.
So thank you so much for this opportunity. First and foremost, I created LoanSense because of my own personal problem. I was denied my first mortgage and by two loan officers, went to the third. The third actually sat down with me and said, pay down your debt and come back. And I said, okay, how many years do I have to eat ramen? And how much will this house be worth? Can I even afford it? So I studied policy in undergrad. So I started researching myself and found out that I could go into an income driven repayment program and lower my payment because I too had an 800 credit score, by the way. And I was actually able to close on a different home, but I was able to close in approximately 2 months after that.
Mm.
We are now at LoanSense helping borrowers in under 21 days understand what actions they need to take with their student loans in order to get the right documentation for underwriting. So that's the thing. People get confused. They're like, oh, but can't a consumer go and do this on their own? They absolutely can. The issue is they make errors or they do not know the right documentation and they'll get 3 to 5 days from closing. And the underwriter's like, this is the wrong documentation, has estimated payments. If you don't want us to use 1%, we need this kind of documentation, but they don't know how to get that documentation. So what LoanSense does is we give a product to lenders and loan officers to estimate the reduction, to invite them to come through our platform. And we have like a TurboTax experience for student loans where we will enroll for the consumer. We will discuss with them their options and we will give that data back to the lender on a dashboard and help the consumer get the right documentation. So we're essentially helping manage the student loan payments as well as the student loans over the lifetime of their loan, even post-close, so that the consumer not just can achieve their dreams of homeownership, but they can get in the right plan that will ultimately get them on track for loan forgiveness. And a good percentage of borrowers who come in where a lender says, hey, get their payment lower, please, because they need it to be around this amount to close.
Yep.
We can also work with them post-close to qualify their loans for forgiveness. And in some instances, people have made enough payments to get their complete balance discharged. And they're pretty incredible results that we can help borrowers achieve. If loan officers happen to stumble across them, we're here to help assist you and to help your borrowers so that you don't decline that loan unnecessarily and tell somebody's dream that they have this dream, they want a house, telling them no unnecessarily.
Yeah, I want to unpack this a little bit. So, people that know me know that I don't pitch products. I'm typically technology agnostic or product agnostic, but when I find things that solve major problems, and there's a couple of things that I love about you and that I could love about LoanSense. First of all, you're so passionate about education. Like the fact that you were a consumer that had this situation and this company was born out of your need. We talked about this a little bit before we went online. How many people out there right now could be eligible for a mortgage, but they're not because of student loans?
So there's 17 million student loan borrowers who are in the primary purchase demographic who are renting. So there are real psychological barriers and beliefs that because I have this student debt, I can't afford to buy a house.
Well,
Even though they want to.
Because it's usually 5 or 6 figures in student loan debt. Like
Right.
that's a mental hurdle. I mean, it's like, how can I buy a house when I have $60,000?
Right. So they think I have to pay my student loans off first before I ever think about buying a house. There's a psychological barrier, but also not just are there psychological barriers, people who try and get declined, even though they can be approved, also feel demoralized. So sometimes it'll take those borrowers years and years and years to come back to the table and try again.
Yeah.
And we want to avoid that because why give that pain, inflict pain on someone when we don't have to. We can tell them this is exact actions that need to be taken, that we LoanSense support loan officers in doing with student loan borrowers. These are the actions that we need to take. And in most instances, we can achieve it in 21 days. In some instances, we can't, but that can help the borrower get closer. And it's the only form of liability that does not require the consumer to actually put a dime extra towards their
Yep.
student loan because of the federal programs in place.
Well, what I also wanted to bring up here is that, there's a lot of companies out there that like to refinance student loans, and they're somewhere in between door-to-door salesman and car salesman and credit repair, right? Like there's a lot of companies, but that's not at all what you do. You're not going in there and refinancing people. You're helping people understand the rules and their actual options provided to them by the government, if it's government subsidized. But you're just helping them get into the right payment plan. This isn't a refi scam where you're turning and burning people and trying to get them into refis. You're legitimately helping them get on a path to reduce their student loan liability. And in that process, you're helping to get them into a home. And that's what I love about this is you could go out there and compete with everybody, but the fact that you're focusing your efforts and your experience on the housing industry to help your generation, or these generations of all these people that have these student loans, get into housing and overcome these mental hurdles. Like, I don't know, I can't stress enough how many people you're actually helping. Like, it's not a gimmick. You guys don't make a ton of money off of this. And you're helping these consumers, and in most cases, you're helping them get their loans forgiven, or you're getting them on the path to getting their loans forgiven. So if you're listening to this and you're creating content like I showed you, and you're getting all this traffic, and a borrower comes to you that's been told no by somebody else, and you introduce them to LoanSense, you get them into a house, and not only do you get them into a house, you put them on a path to get their student loans forgiven, and as soon as they possibly can. You don't think that customer is going to be like more loyal and you're going to get more repeat and referral business from that person? You don't think they're going to just be over the moon?
Oh yeah, we have loan officers that happens to. Like, it's like, oh my gosh, you're the first loan officer that said yes, just like my story. And they'll send, they'll be like, for example, nurse, or they'll go to their work and be like, oh, I worked with this lender. And then they'll be like, oh my gosh. And they send them like 5 of their coworkers to me, for example. So if you really understand this niche, and it's not difficult because we will train you, we hold once a week trainings. We will train you. We will help walk you through how we achieve our results and what we do to help borrowers pre and post close. We also have obviously talking points, FAQs, everything to make it as easy as possible on you as the loan officer to help people access. We also give loan officers estimates, obviously, at lender.myloansense.com, but we also give consumers completely free estimates on what we could adjust their student loan payment by, ahead of ever asking for any type of fee from the consumer either. So
that's really cool too. And yeah, we're definitely going to share that with everybody. You have a calculator that if you can get the consumer to your article or your video or whatever, you have a calculator. They can go on there for free, put in their information, and it'll basically show them how much more they can afford as a mortgage by right sizing or getting into the right student loan program. Now, another thing,
it acts as a lead capture. That's another thing.
It acts as
information. Yeah.
And it acts as a lead capture. Another thing that we had kind of talked about is the number of potential minority borrowers that they get hit really, really hard on this end of the spectrum, right? You were giving me some numbers.
Yeah, 2/3 of student loan debt is held by women, and Black women specifically take out about 20% more for the same degrees as other groups. So even if you're Black American, you might have less supportive resources for your education. So you take out more debt and it helps enable that access to education. And even not just undergrad, grad school, you go get a law degree, you go become a social worker. Now you carry six figures plus, and you try to go buy a house and a lender says, we're going to use 1%. Even if you earn six figures, that can disqualify you. And you're doing what you've been told, right? To earn more. And you are at risk of being disqualified, right? So income driven repayment programs are really very important vehicles to help people being able to access a mortgage. And it's also, there's many different plan types, right? There's extended, there's even like graduated balloon payments that the government offers, which is crazy. I don't think they should offer that. But the most successful results, like from studies, is that we enroll people into income driven repayment programs, because those are the ones that actually adjust based on a person's income and the likelihood they're going to default, and that there is lower, and that they're going to maintain good standing. And that's exactly what we do for borrowers. And it's especially important for, minority borrowers, because they're taking out more debt. They have less family savings to send them to school. So they end up taking out more debt. And the more education they get, the more debt they have. And all the time, like the 50% of people that come out of grad school, over 50%, last year was the first year where over 50% will come out with more debt than they're going to earn in their first 3 years out of school. So you
Wow.
can imagine you have a huge debt burden and you're doing everything. And then, of course, there's also 4 out of 10 borrowers who are non-traditional students, start college, take on debt, but don't end up getting a degree or don't have a degree yet. And they're carrying that liability that impacts their DTI, right?
Wow.
So if they don't have that earning power and they have that debt from an undergrad degree they started but have not finished or will not finish, then these programs are really, really vital. And Biden is actually, one other piece of information. Biden is releasing a new program that's going under review right now, public commenting period right now, that will actually lower the payment by less than half for the lowest earning Americans. So if you earn under $30,000, you literally have a payment of zero. And that's to protect people who've gone to school and don't have a degree, specifically. So anyways,
Well,
huge
and that's
impact.
gonna cause a bunch of trouble too, because it's that zero payment that really throws inexperienced loan officers and underwriters off. And
Right, because
and
then they use the 1%, they don't qualify it, they don't understand Fannie will allow the 1%. I mean, allow the $0 payment. Yeah, absolutely.
yeah, yeah, and that was the crazy thing about this particular guideline, because initially Freddie was silent on it, so we could send it to Freddie and they would accept a $0 payment, and then they kind of switched, and then Freddie said, "No, we're not going to do $0 payment," but then Fannie said, "Okay, we will." But what happened, like you said, you keep mentioning the 1%. So for the first 6 years that this guideline had changed, FHA was a straight 1% calculation.
Mhm,
If it wasn't fully amortized, it was 1%. Well, all of your call centers, they're just quoting 1%. So if they
mhm.
don't know the guidelines, they're saying, well, it's 1% of your balance. And like you said, with a 5 or 6 figure student loan
Right.
balance, that is a 4 to 5 figure student debt to income ratio calculation, just not going to fly. Uh, yeah. So there's, and the great thing about this is there is so much content here, because like you said, there's so many different kinds. Like even when it comes to income based, there's like 5 different income based programs, right? There's like
Yeah,
income
there's a lot.
IDR,
Yeah.
IBR, you know,
Yeah, there's a lot of different programs, and sometimes loan officers will be like, "Enroll in IBR," and it turns out IBR is actually one of the oldest programs and the least generous program, and in fact, it will, by the end of this year, be phased out entirely. So,
they're not going to retroactively go back and help all those people that are in that program.
well, they will let them stay in that program, but they're not gonna allow any more new people to enroll in that program, because it's actually the program with one of the highest payments now. So if a loan officer, and we'll have people that come through, they're like, "My loan officer told me to get into IBR," and it's like, "But actually you can get $200 less on this other plan." So just be careful what you recommend, because there may be better options for that bar. And that's why coming through our platform and getting a free estimation is really critical, because then they can see right away, actually, this platform is telling me to consider pay as you earn. Or, and by the way that married couples file their income taxes impact what their payment's going to be on some of these programs. So there are some complications in which one they enroll in. And that's why there's several factors we like to help consumers discuss before just enrolling them into any random plan, right? We want to help them understand what they're enrolling into, because obviously closing on the mortgage is really important, but then maintaining the program over the duration to get it forgiven is also important, you know?
Yeah.
So we kill two birds with one stone. And then we help them get the right documentation, principally by kicking people into repayment and allowing the underwriter to actually use their payment instead of 1% or even 0.5%. In some cases, the payment is lower than 0.5%, and that's more helpful to that borrower.
Yeah, and I mean, I feel a little redundant here, and I feel a little bit guilty for keep beating you guys over the head that you need to learn these guidelines and create content about these guidelines. But Catalina, you've partnered with some big national lenders,
Mhm.
and you did some pipeline reviews of their turndowns due to debt to
Yeah.
income
No, I mean,
ratios.
yes.
Tell me what came out of that, because that
It's
shocked me. So
crazy. So the top 10 lenders, literally in this year, not even 2021 traffic or 2022, like literally between 2023 and 2022. Sorry. I say 2022 traffic because 2021 was when the rates were really, really low, right?
yep,
Um, Top 10 lenders easily are declining over $300 million dollars in loans due to high DTI driven by student loan debt that could have been adjusted. 300 million. I mean, this is a massive amount of loan decline that is transpiring. And we're doing analyses of just high DTI decline. And it's a more critical high DTI decline in the recent market. High debt to income is a higher reason for decline than credit. Okay, especially if you're reaching
yep,
an educated bar or a bar that has even started an undergrad education. Like having 550 credit is not the main barrier. It's the amount of consumer debt consumers are getting into. And so, yeah, over 300 million. And the crazy thing is, it depends on the demographic they serve. But if they serve, if they serve, it depends. If they serve heavy minority urban areas, then the percentage upwards of like 75% of the loans that can have a student loan adjustment can have a student loan adjustment of their monthly payment of over 50%. So it's a huge amount of movement we can help borrowers achieve just by getting into the right student loan program. And so the analysis we've done with these national lenders is identify exactly the loans we could have helped them save. Um, we'll also do co-branded assets to help market the message, and we'll help on the front end, and we'll also help with a repath, like saving from decline. Also, there's another use case, which is like cash out refinance. If there's a net tangible benefit to anybody they're servicing, right? That has student debt. That's also another use case. But I bring that up because those are all use cases that loan officers can address, right? Go back 6 months ago, this
yep.
last 6 months, who came through with student debt that you didn't know about that you can help? You can follow up with them now. You know what I mean?
Yeah,
Do an
yeah.
estimate, follow up with them now,
Well,
right?
and you know, in during a market that, you know, this is tough for loan officers, but it's even tougher for real estate agents right now, because at least we can lend in the entire state. They're in a little geo-located farm
Mhm.
that they're trying to sell in. So this is a great excuse to get on the phone, call all your referral partners and say, "Hey, did anybody get turned down for any of your borrowers get turned down last year because of debt to income ratios?" Like, I'd be happy to take another look at them, because we discovered this mistake that lenders are doing, that they're turning down consumers at like a crazy, at a crazy pace. there's a lot of there's a lot of things that you can do with this, but in this kind of like in a rising rate market, debt to income ratio is the number one thing that we need to solve for. Because when rates go up, then their purchase power goes way down. And as an originator, there are very few things, unless you have a ton of money sitting around and you can pay off all your revolving credit card debt, which that never makes sense, right? Because your minimum payments are 1% or 2% of the balance. Maybe you can pay down your car loan to less than 10 months so you can remove that from your debt to income ratio, but nothing is as impactful as adjusting their student loans. We just don't have an opportunity as originators to make that much movement on their debt to income ratio. And there's not very many borrowers that we have that don't have student loans. And this may not even, listen, they may be able to qualify for the house that they want, but they can't be competitive. Like, I would still look at this service, and in the process, even if they qualify for the mortgage, I would introduce them to LoanSense and say, hey, let's get you into a house and let's fix these student loans for you so that you're saving all of this money and you can potentially get your student loans forgiven. Like, you don't even have to do it to qualify somebody. Just having this knowledge and having this experience is going to build value, and it's going to build a deeper relationship with that consumer. And quite frankly, again, this is another thing to teach real estate agents about, is to go out and help.
And we have, by the way, in our content, once people sign up on lender.myloansense.com, we have all kinds of content and content ideas there that
love here.
Yeah, that loan officers can start to use. Just look at us, take our presentation, and just start copying it and start giving it. That's one other thing. One other thing I wanted to bring up, Scott, real quick from a data standpoint is in low interest rate market, the average income of a person who originated was about $86,000. In this market with higher interest rates, the average income is $77,000. So it's actually going down because more moderate income people can now actually compete and get their offers approved. So I bring that up because this is a good market for moderate income person. And guess what? A moderate income person is even more impacted by student loan debt. So I just wanted to put that out there, but I'll let you continue your presentation.
No, absolutely. And man, this went by really, really fast. I hope that this conversation has really kind of lit a fire under any originator that's listening to this. I've got a bunch of student loan content. Now, I screwed up on this. This is supposed to be lender.myloansense.com. This is an example of the calculator, right? You have a free tool. Why don't you talk a little bit about the resources that you have available for loan officers? And I'm going to put the link to this in the description and in all of the notes so that you can reach out to LoanSense and take advantage of this. But Catalina, could you tell me a little bit about the tools that you make available to originators to be able to get in on this, really take advantage of this demographic? Oh,
whoops, I'm on mute. Sorry. Right now, we are providing 45-day completely free trials. And by the way, you can always invite and estimate for free, even post trial. But the idea is like you go to lender.myloansense.com, you sign up for your dashboard. You will get your own links. That's for a lead capture as well as your own estimator. And the reason this is so important is because once you invite consumers or once you put the lead capture on your website, on your social media, on your email, wherever you put it, then we know the consumer is coming through and we know how to tag their data and get the data back to you as the loan officer at the loan officer level. So that's really, really important. So we allow you as a loan officer to estimate completely for free what the reduction in the student loan payment will be according to the federal guidelines, federal guidelines being student loan guidelines. And you can invite your client. We also provide a lead capture. We provide some training materials. We have a weekly call that will train loan officers on the program, answer questions. And inside the dashboard, we also Under product guide, we also give you a link to the most commonly asked questions by consumers and talking points so that you are fully equipped to go out and really start talking to people, learning about how you can help and getting the message out there, because we want to work in partnership with loan officers, because the thing is, these are the two most regulated debt markets, right? And it's hard enough to understand just all the requirements for mortgage, let alone the student loan side. So we're here to give you the tools to partner with you all to be successful, so that we can help more borrowers, achieve their dreams of home ownership.
Well, and again, you have so much information and so much education on your site, and even those FAQs, every single one of those FAQs, that question is the title, and then you do a short video reading the answer to that question. Like, you have so much information and so much data that we can use as originators to create content, to create videos, so that all of these consumers going on Google and YouTube have a fighting chance. Because I'm telling you, I think this niche, more than anything else, these people have student loans. They're educated people. They're used to doing research. They're used to doing homework,
They'll find you.
and they're
Yeah.
not taking no for an answer when they're getting turned down.
Yep.
They're going back online and they're looking for answers. So,
and I release content weekly, by the way, too. And I have some loan officers who straight up take my topics I'm talking about and straight up make their own content. And I guess what? Copying is the greatest form of flattery. So I welcome it.
well, because
take
they're
my
never,
videos and just share it out everywhere, all over LinkedIn, all over Facebook. I'm like, fine by me,
Yes, you're 100% right. And they're not going to ever say it exactly the way you said it. Even if you gave them a transcript of your script of what you said on that video, they wouldn't read it the same. So I encourage the exact same thing. Anything that I do, swipe it, get as close to the way I do it, or just do it in your own style.
Yeah.
So Catalina, let me wrap this up real quick, and I'll say goodbye to you. Everybody who's on here, we have a free content creator community. You can find it at findmywayhome.com/solo. SOLO stands for Second Opinion Loan Officer. And so everything in that community is do it yourself. We're teaching you how to do scripts, how to come up with content ideas, what content I'm publishing, what kind of response I'm getting. If you're not the do-it-yourself type, we do have a done-for-you solution at the Find My Way Home Expert Network, where we will help give you content topics. We have a professional director that's going to draw your content out of you. We're going to produce it, publish it, promote it, capture leads, follow up on those leads for you. And if they're not ready to buy now, we're going to nurture those leads for you. You'll find all of those links in the description, of here. And Catalina, I just want to say thank you so much. It's so crazy that I got so into that niche, and then we found you solving exactly the problem. Sometimes when we create content, we're just talking about problems, but we don't always have the solutions. And I love what you guys do. I love your passion. I love your education. And I just want to thank you for being here and sharing this with whatever meager audience that I've managed to scrape up at this point. But hopefully anybody that listens to this, we're going to give you a real competitive advantage on this market if you start paying attention to people that have student loans.
Yeah, no worries, Scott. Thank you.
No, thank you so much. All right, everybody. Thanks for joining us, and we will see you next time.